Welcome, fellow traders. Once again, we are back to proper FX, where things are made clear in the financial markets. My videos are purposely meant for education, just to educate you, for you to at least know whatever is going on in the market. You just get a concept, you understand it right from the core. You get it. All right, so I just want to sway to charts. This video is actually focusing on, we are just focusing on some common mistakes that we do in the market. Very common. Okay, I have a lot of research here. So here, trading psychology, the common mistakes. Trading, once you have the strategy, it's all about consistency. You get it? So in my last video, I explained about you having, like, keeping a fixed amount, like risk. You just have to make sure you are keeping it. Don't risk too much. If you are trading with $100 and you have this plan, you make sure you stick to it, right? Just stick to it, because out of this trades, out of your win rate, you know that there will be days that you will lose. So when you lose, the day that you lose, if you are losing, you're okay with $100. But let's say the day that you are losing, you are racing, instead of, you have used $100 to gain up to this level. Maybe you've already performed your 5 trades and you've won. You get the remaining 6 from your, the remaining 5 from your percentage, 50% win rate, which means it will be your losing trades. And now, instead of you sticking to your loss, which is $100, you have raised it to about 200 or 300, which means here your loss amount, like, will go high. Raising $100, right? So here we'll just go high, and at the end it wouldn't make your account balance okay. Like, you are going to lose drastically in the market. Okay, so having this knowledge, knowing the trade, how to trade or how to read the market structure is not alone. Like, it is not okay. Yes, that is, somebody can even be smart, the person is very smart. He understands the chart well. Before, when I started trading, that was my my problem, because we get to understand things fast. Once we are privy to it, you get it. But the main issue is the battle for yourself. Like, the battle is yourself. You have to know yourself, like, at least put certain things down. So one thing is, you don't have to, let's start from the first point. The first point I just gave, like, okay, so the issue is, one is over trading. Over trading, it means you are taking too many trades, too many of them, too many of them. Okay, the last time I explained about market structure, if you already watched that, actually, if you are targeting a particular place, let's say you have this swing movement, you are trading in this form, like, from here price got here, from here price, you are expecting price to go down. Okay, so if you're over trading, it means you are taking too many trades. Maybe you are not following your system. Once price, from here to this point, price, at least I'm expecting price around this point. Until price gets to this point, this particular side, I'm not entering, I'm not in the trade, right? So I'm just waiting patiently for price to get to this point before I set in. Here, somebody will be here and try to, we know, whenever there is a BOS, because there is a break of structure. If you haven't watched my video, just watch. Whenever there is a BOS, there is always what? Templates. Here is a BOS, right? Okay, so whenever there is a BOS, this is not a proper analysis, but just take it like that. There is what? A temporal pullback to a point of interest, either supply zone, demand zone, like those things. Okay. So here, once price got here and price is pushing through this part, maybe you took an advantage from here to here. You can see that it will take you time for you to reach that point or your point of interest before your next trade. And at least it will take you a maximum of 2 trades. Right from here, you target this high. So like this. So long position. Maybe right from here, you target this high. You are targeting only this point. This one too, it has a good risk to reward ratio, about 5.39. Get it? But as I said, if your win rate is higher, sometimes it takes more time or it's difficult to get there. But mostly at the end of the day, you can get it. But it also comes with if your target is high, risk to reward ratio is high, it also comes with some smaller win rates. That is the effect. So when price gets to this point too, I'm also targeting this point around this zone. From here up to maybe possibly down here, you get it. And this one to reach reward 777, which is good. Okay, so with this, you can see that the total number of trades you can have per day is what, 2. That is if you are trading the higher time frame. But someone will come within the smaller time frame, maybe follow the market in this direction. Once price from this, that is if you are a scalper, you have time for the chart. Something like this. You get it? Maybe from here, he's expecting price to come here, then possibly target this high, then come here, then target all of the way here. So if somebody is a scalper and trading this way, then the person is targeting how many trades? At least here will be 1, then 2, here will be 3. So the person is at least having 3 trades. So if you don't have like a proper structure, this one, even the maximum was 3 trades, and it shouldn't happen just one day. It can. Maybe the 3 trades can even be two, right? Or 1, like you just get one opportunity during that day. So just one good quality setup is okay for you. 1 or 2, it is okay. That is why I said initially I will get money in the morning, like big amount, then I'll just continue trading. Like the chart is my friend. The chart is never your friend. The more you trade, you lose your psychology and you'll be giving your money back to the system. And that is it. And at the end of the day, you may, like, instead of following your strategy, you see that your emotions will set in. So emotional exhaustion. You'll be tired. The way you think, the discipline, the way you are doing your things, you lose track of it. And it also comes, taking too many trades, even when setups are not clear. Over trading is very dangerous. And now, once we are having that as a first point, just take a look at it. So the fix is to have what, a maximum of 2 to 3 trades, then correct setup, 8 setups. If no setup, no trade, is also a position. If you're having your money in your account, it is also good. Sometimes you take trades and you lose and you tell yourself, I should have waited. Then in some few minutes, a better opportunity will come out. So no setup, please and please, do not trade. I'm just trying to make sure you get it, because the raw trading is this part, knowing this. Okay, and the second point, fear of missing out. Fear of missing out. When you come to the chart, maybe you plan this particular side to, you had in mind, right? Because price from here went to this point like this. Right from here, when price came around this point, it used this zone to break this high. So you are targeting your trade around this zone. you have this POY, correct one, because here is an order block plus you have a fair value gap here too. Here is an FVG. So all this place you are actually expecting your trade within this zone. And you can see that you have waited for a very long time, but price has not come back to this particular POI or point of interest. Once price is not here, then you can see that it has also been going up. Okay, what if it doesn't come back and it goes all the way up? And because of that, instead of you waiting for price here, just look at this. Instead of you waiting for price here and target this particular high, you are impatient and you think price is going like it is going away. It will never come back. You get it? So from here, you can see that you have what risk to reward ratio of 3.82. Then instead of waiting, you just enter where price market is here. You just enter around this zone. And right now, when you enter, now you know that the safest place to hide is still below this point where you have your structure, your POI. The safest place is just below it. And you can see that just look at what you are risking, 0.78. It is not even 1:1. What you are losing is more than what you are winning. Get it? So here you can see that it's what, 99,000. 99,000. And your target, okay. All right. It seems okay. So this is it. So the whole point is be patient. Just wait. Wait for your setup to align. Just wait for price here before you enter. Don't follow the candles. When you see that it is going, leave it. Having your money in your account is okay. That is very good. So that is the fear of missing out. You jump into trades. You jump into trades because price is already moving. And why seeing big candles and thinking I'm missing money and watching others profit too. Maybe you've seen a post from other people, your colleagues. Later on I realized it also had effect of me because I have friends with some people that are also trading, and sometimes initially they used to post yes. And if you don't take care, if you don't shut your mind from those things, you'll be in the pool. Your money is going to be given to them. You understand? So fear of missing out. Don't fear. Always wait. Wait for your trade. So the fix, as I said, you enter in a buy zone. Instead of waiting for price here, you just enter around this point. Like that. So here is a buy zone. Here. Because your risk is too much. You get it? Wait for price to come to your direction. Price will come. Don't worry. Even if it goes, let it go. Immediate drawdown. So the moment you enter around this point, sometimes when you look at the amount you'll be risking, massa, let me target my stop loss here because what I'm risking is too much. The moment you enter around here, then price will come all the way back to your POI and you lose. And that is when you'll be panicking. Like that panic will set in. All right. So, and you are chasing instead of planning. When you enter the trade from that point, it means you are chasing the market. So you don't need every trade. Focus on your session and your setup and wait for retracements. Those zones where I was saying your and also fear of losing trades. There's this psychology, the fear of losing trade. Maybe before you enter this market here, you've waited for at least price to get this zone here. Once price got here, with your strategy, you have seen that you have this liquidity, you have this POI, you have this, let me bring it down. So here it's like this. We have another block here, right? And maybe you've waited for confirmation, which you've gotten. So from here, maybe you have a break of structure around, let's say, this zone. right? So there was a break of structure or change of character, and price came all the way to this point. Don't hesitate. Enter. You understand? You can, one, some people will just try, wait for confirmation. You can wait for it. Sometimes price will come like week through, take some liquidities, possibly sweep here before it closes. Then you go, and sometimes me, I wait for only 15 minutes candle to close in my direction. When price gets to this point, just 15 minutes. Once price closes in favor of this direction, I just enter. And one other thing is price can come, instead of closing, it can just hit it, then go all the way to this point. You get it? So the fear of losing, you just hesitate. You hesitate instead of allowing, like letting the market decide your fate. You are just looking for more confidence. By the time you realize, price will go. So that is one thing you have to psych yourself. What will happen will happen. Once you have your analysis in place, maybe you can look for just 5 minutes in 5 minutes time frame confirmation. There is always a risk to whatever you decide, because when you put your penny on it, your price will come through it and take your money. Just a confirmation, just one. You get it, then at least you enter. So that is it. And so maybe it is coming from your past losses, because you have lost too much or you are risking too much money. The amount you are losing, assuming you have $100 and one trade you are losing $50. That is why risk is very important. Just take control of it. It will get you panic in the system. You'll be panicking when price is moving. But if you are having $100 and what the trade that you are losing $10. Let it run. I don't care. You get it? So that is the part. Once you're able to manage your risk, that is why I was recommending 1:2%. When you get to the pro stage, then you know that maybe you can increase it to 5%. You get it? But that one, you must know your strategy very well. Okay, you have to understand that losses are also part of the business. And before that, you have to backtest your strategy, get data of what you are doing, and also waiting for too much confirmation. I've already explained this. When price get to this point, maybe you are waiting for too much confirmation before you enter to this direction. And by the time you realize prices will already be around this zone, and you'll be thinking of placing the trade around here. And with that, you have a bad entry, right? It means around this zone, you are risking too much. So that is it. Keep your risk very low and target around this point. It will give you more money. So here, assuming I'm risking, no, this thing is gone. Okay. So assuming I'm risking just $10 here, 10 out of 100 at this point. When I win up to this point, I'm getting 6.67 times the 10, which is at least $60. It's okay, right? It's very okay. If you are target, let's say $1,000, you are risking $100. Account balance is 1,000, you are risking only 100. So when you win 6.67, you are getting $600 for each this trade, just one move. Are you not okay? You are okay. Stick to it. So the fear of being wrong, you also think of, because maybe this market will go, right? So late entries, that is poor risk reward, missed opportunities, then it leads to revenge trades. All right, then the next one is revenge trading. Trying to win back losses immediately. Maybe if this part you were chasing the market in this manner, and all the trades that you place, you had a loss. Losing is very, very emotional. When you lose money in the market, it's highly emotional. If you don't at least control yourself, you can take decisions to reclaim, like you want to place big loss size, you want to risk more in order to get what you've lost, right? This particular part actually works. That is the difference between a pro trader and a beginner. If you master this wall, you are already an advanced trader. Even if your strategy is not good, just being consistent, managing yourself emotionally. Don't take trades because you have already lost money. Don't change your lot size. Don't change your lot size because you have already lost money in the market. Don't do that. It is very key. Okay. So trying to win back, emotional reaction to losing, then ego. I must recover now. Sometimes I have this issue sometimes until I realize that I have to put this away. Before you get to the pro trader, Charlie, these are your battle. And as I was saying, trading is actually a battle for yourself. Okay, so the effect once you are revenge trading, your losses will be bigger, loss of control, account damage. You may lose your account. How you have to, after a loss, if you lose to a particular amount, let's say you can set to yourself a daily target. I'm targeting $200, $100 maximum if I'm losing. If I lose two trades, let's say $50 per each trade. If I lose two trades, I'm done for the day. I'm not trading again. You just step away. Then you set a daily loss limit. That is what I said. And you have to think that trading long term is where your numbers are. I've already explained this one. You see, the long term, that is the 10 trades. Maybe your first trade, you had a loss like this. Second trade, you had a loss. Then the third trade, you want to recover your account. So instead of sticking to this $100, you increase your risk to maybe 200 like this. I've changed it here, so it has, because it's a formula, it has updated all this. So here, right from here, maybe your next trade too was a loss. Sometimes your losses can be in a row, and it is going to pain you. So right from the start, you have lost $800 out of your 1,000, and now your balance is 400. You are looking at your balance. What should I do? This is too much, When you lose the first, maybe on the first day, 1, 2, just step away. Or this alone, sometimes you can even take a week, just 1 week, because it is money. It is better to have it in your account than to lose it. You get it? So in the long term, that is where your profit is. The number of trades. When we did the calculation, we saw that if we are raising a particular amount, at least we are targeting some particular listen. And another one is gambling mentality. You are trading this market, you don't have any clear set here. Oh, okay, the market wants to come down. So the person will just enter, boom, right from here, market will be coming. Then here, it will turn and hit the stop loss. You don't have any clear setup. You are trading without a plan, random entries, increasing loss size. Instead of following a fixed risk amount. I mean, I'm not in favor of the loss size, but your risk amount will determine your loss size. So if instead of you following that, you are not doing that. So why it happens? So Forex traders, we don't gamble. When you talk about gambling is out of strategy. You understand? That is the whole mindset of gambling. So when people say you are trading Forex, you are gambling, it's not gambling. You can see that I've walked you through all these videos, like this education. And for you to get to this part, it means you have learned something. And you can see that we have a clear format, a clear mindset that we are following. And that is it. And also the desire for quick money. You get it. You end up gambling. So the issue is you get inconsistent results with gambling. Sometimes you get a huge profit. Oh, I'm good. I'm a good trader. Then the next day, just one particular trade, it will wipe all your accounts. You don't know what to do. You wouldn't know what to do around that time. So you just have to fix your gambling mindset. Okay, so the fix is treat trading like a business. Have a trading plan or journal. Every trade must have a reason, an entry, stop loss, target. I've already explained this. And also entering at wrong zones. Entering at wrong zone. Don't enter the market at wrong zones, as I've already explained. Wait for your point of interest before you enter. Eh? Don't put your emotions to the chart. Don't put it. Never. Ignore, let the market do what it wants to do. Market will always come to your point of interest. You get it. You just keep your analysis up. You get, one day you get a good setup. That is how it works. So you focus on supply and demand zones, order blocks, liquidity areas, fair value gaps. Then let price come to your level. Don't chase the market. Don't chase price. Wait for price to come to you. Once you get to that point, you better understand it. Okay, so moving stop losses. Okay, as I explained, here, maybe you place a trade here. When price is coming from this point, you have here mark. Now the stop loss here, because when it hits here, you have lost your money. So when price was coming like this, and price maybe was approaching your stop loss, once you saw it, Charlie, this is not good, it will take my money. So you just extend your stop loss like this. You've already placed with a particular loss size. If you are raising $100 around this point and you have already placed a trade, if you move now, your stop loss will move to $120. Then the market will still be coming. Charlie, it wants to hit, instead of the 120, then you move again. Then maybe here now you are raising about $500. $500 is already half of your account. Actually, I've been doing this, so that is why I'm taking interest in this. I've been doing the same thing, and it has been killing my account for a very long time until I realized I just have to leave this. You get it? So before you become a pro trader, like, you are going to face all this. And until you realize that those are the problems, you will never be successful in the forex market. That is the whole truth. So you don't have to move your stop loss. If it is here, let it be here. If it works through and it goes up to your direction, you don't care. Like, you've lost the account. That is it. You've lost that particular single trade. No one single trade will make you profitable. So just take it like that. All right. So never move your stop loss unless locking profit. Okay, so with this, maybe price has come all this way to this point. Let's trade it like this. Something like this. You see that maybe we place a buy trade around this. So when price came, now we are in profit up to this point. All these are profit because that is the green part. You can move your stop loss from here, from negative to maybe around this zone, this point. You understand? Where I have this dotted line moving. So that at least now, instead of losing, when it comes back to your stop loss, you are losing a particular amount. Now you know that you are well hidden in the market in profit. And even if it comes back to it, like, you have something to take home, right? That is it. So just stop the act of, you understand? Just keep to yourself or practice these points, what I've stated here. So the more you lose trades, the more you become frustrated. You understand? And once, if you don't take care, these things, over trading, you may be ending up with bigger losses, and you may, like, revenge. I want to recover what I've lost. Then by the time you realize, your account will be blown. You've blown your account, and that is it. A single trade means nothing. It means nothing because I've already explained the risk concept, where you target some number of trades with your win rate. So you are playing a series of trades. If you lose one, don't care. The next trade will be a good one. So the core problem now will be like lack of discipline, lack of trust in your system. You don't have enough data to trust yourself, and emotional attachment. Don't attach your emotions. Stop watching the chart for too long. Once you are done with your setup and you have the trade running, you can just leave it. Sometimes you just give yourself time, you come back and you watch. So the practical rule, risk 1% per trade. Once you raise this 1%, like it helps you to manage your emotions. You don't care about what you are losing. Then maximum of 2 to 3 trades per trade. Only trade your setup, and this will help you to prevent over trading, as I explained. Always use stop loss. Always lose stop loss. Otherwise, there will be one candle that will take all your money. News will come and it will take all your money one day. So you have to use stop loss, and you have to keep a trading journal, track your trade. Every trade must have a reason. You has a reason for each trade you run. You understand? You should have that particular reason. Make sure you journal them and walk away after 2 consecutive losses. So if you are planning maybe 3 trades per day, you've lost 2. Well, the 2 can affect your psychology. You can revenge trade. But if you have 3, you can place a third one if you are following your risk margin. But if you realize that you are emotionally affected, you just have to hold on. All right, then focus on the process, not the profit. So this is the whole thing. This is the whole thing. Make it like you are playing a game where whatever is coming out is not important to you. What you want to do is to how to get the system, like how to get it correct. You understand? Yes. So once you focus on this and once you work on it, making it better, automatically the money will be in your account. All right. So here will be the end of this particular video. Trading psychology is very, very key to your success. Don't ignore this video and don't ignore practicing what is stated here. All right.